Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, don't forget, everything to discuss today is not financial advice. This is just my view on the markets, and it's for educational purposes only. Right, let's pick up where we left off, shall we? So obviously, quick look at the monthly. Downtrend still. Weekly. Still technically in a downtrend. One thing obviously that's wise to point out is the fact that we did close lower. We didn't take out the June lows, but we did close lower. So now naturally what we're either looking for is for this weekly candle to take out these highs and thus start to create potentially a new uptrend on the weekly, or looking at this potentially creating another lower high followed by another lower low. So it's something to be aware of, gang. Obviously we're not out of the woods yet, although based on the sentiment on Twitter you'd think that we're approaching all-time highs again. Daily, yes, things are starting to turn around. Obviously we have been in this downtrend and we are starting to turn around and show signs of life again, but as history has shown us in this macro downtrend, that even in a local uptrend we can still turn around. Okay, even in a local uptrend we can still turn around. Exactly the same. So it's not time to get uber bullish. It's not time to get uber bearish. We're just range bound. We're range bound until proven otherwise. Right. So as we said, following on from last week, we were talking about a key time pivot, which was from Friday last week. Let's see if I've still got the screenshot. Yes, I do. Here we go. So here's a screenshot from last week's video. If you missed it, then apologies that you missed the move. But yeah, we're looking at this coming in, the time pivot here. This is based on the 3-day chart, and I was saying that by the end of the week, I were expecting Bitcoin to make a move. What direction? Couldn't tell you, because nobody can predict that. But we were looking for a move at the end of the week. Now, if we throw on that same time pivot, which is this, and zoom in, here we go, on the Friday, right on cue, on the five spot pivot, we got the bounce, and it's a decent bounce too. So far we're up 12%. Well played if you caught that long, and I hope you've locked in some profits. Pay yourself, why not? Is it a position that you need to be holding onto until new all-time highs? No, not at all. We're still range bound. So yeah, this time pivot is commonly referred to in our Discord as the God pull, because it's obviously timed some significant moves in the market we can see. So something to be aware of. Get it on your chart if you don't have it on your chart. We're using the 65k, we're using the 28.7k, and then we're using the all-time high here for the time pull. And the next one, if you want to note this down in your calendars, the next one will be 5618, and we're looking now at the 3rd of December, give or take. So like I said last time, I always give this 72 hours either side, but roughly the beginning of December for the next major pivot. So does that mean it's a pivot to the upside or a downside? We don't know. We just know that coming up to these sort of dates, we're going to hopefully see some volatility. So yeah, that's an update on that. Obviously, recap, we know that this channel has now been broken, back tested, and then are we starting to see a huge breakout here? Who knows? It's not how we trade. We're not getting overexcited, because so far we broke out, we back tested, and we went sideways a little bit longer. It's not the biggest sign of strength you've seen. There's also many diagonal lines being posted on Twitter. There was this one. There's one from up here. Oh, wrong one. There's lines everywhere, and every 5 minutes someone's screaming breakout, and you can just look at the reactions. They're just not exciting. This is probably the best one that we've had so far. But in the group we're not breakout traders, so I'm not interested in taking those, because breakout traders have one of the lowest hit rates of any trader, which is why when you're new to crypto or you're new to trading in general, and you start listening to some of the morons on YouTube, or TikTok or Twitter, you know, they'll tell you to trade the breakout. You know, how many times have we seen down here? I'm going on a side rant here, but how many times have we seen down here influencers posting this support and resistance, clear support and resistance? So credit to them, they can find support and resistance, but then they're telling you don't trade within this. So don't trade the easy trades. Short the highs, long the lows, short the highs, long the lows, short the highs, long the lows. You know, eventually it breaks. Okay, so 1, 2, 3, 4, 5, 6 winning trades, 1 losing trade. What they're telling you to do is trade the breakout. You know, how's that a good hit rate? How's that a good hit rate? Because if you'd have traded the breakout, then you'd have taken 1 trade here and you'd have got stopped out. You'd have taken 1 trade here and you'd have got stopped out, and you'd have taken 1 trade here and you're up a little bit. You know, could it continue? Yeah, it could continue, but your hit rate's then 1 in 3, as opposed to trading inside the range, long in the lows, short in the highs. Oh, that makes a little bit more sense, doesn't it? You know, it doesn't take a fucking rocket scientist to figure that out. So yeah, just pay attention to who you're learning how to trade from. Anyway, right, so what's happening? Well, we're still in the sideways range environment. So, like we normally do, let's throw it on a volume profile. Let's figure out what's going on within this range. So, we know we came down, we've been hovering around this point of control. You know, there's so much volume down here, it's unreal. And we could see that at the open interest at the time as well. The open interest on most exchanges was sky high down here. So, either way, we had to make a move in one direction to close either the shorters that were shorting the lows, or potentially squeeze out. If price had to come down, would have squeezed out obviously the bulls that were longing the lows, which, you know, at the range lows, your long is your better option. Let's be honest. And right now, obviously, we've squeezed up to where we are now. So, what could happen from here? Well, like we've been saying for a while, the next point of interest, if price does continue up, the next point of interest for us in the group will be this zone here. So if price does manage to get above here, and right now, just for reference, the reason why we're stopping around here is we're at a golden pocket. Quite simply, we're just at a golden pocket. You know, if you want a little bit more confluence here, then you've also got the 382 around these levels too. Look, we're at the 382. So you got your 382, you got your golden pocket. So likely we're going to stall here. Now, is this a stall and then a drop down? We don't know. Is this a stall and then a move up? You know, we'll have to wait and see. If we take a look on the footprint charts, we are starting to see what it was this morning. Well, I had a look. Let's have a quick nose to see if it's there. Yeah, we've still got some bullish CVD divergences going on. If price does come down and take out this low, then these bullish CVD divergences will be invalid. But if price does continue up, then, you know, there's an in play that people want higher prices. So that's what we're going on right now. So no strong bias. We do have a very small range to look at right here. Quite simply, once again, we throw on a volume profile and look at that. You've got a nice sideways range. So you can trade this range until it breaks, you know, short the highs, long the lows, short the highs, long the lows, and eventually one way is going to give. Now, let's come back out to the 4-hour chart and let's take a look. So as we were saying, if price does get above where we're at here, then I'm looking within to this region here. And anywhere in this region is fair game, so this is more of a zone. Okay. You know, it doesn't have to be clean, it doesn't have to be tap the level and then reject. It could move up into this range, you know, we could even take out this high here. Yeah, let's get some of these squills. You could take out this high here, price could move up, take out that high, back in, and then you've got to trade back down. Now, if this does happen, then you trade back down. First and foremost, you're going to be looking at the value area high. If it gets acceptance back into value, then you're going to be trading it back down. back into this consolidation here. Okay. The other option would be it doesn't actually get that high and it only gets to the value area high. Well, there you've got another trade. Okay. Or if you are long, then you are taking profits. And if you've not taken some profits here, then I'm going to question why. When you're coming up into a local golden pocket, you're going to be taking profits off the table. Pay yourself. Okay. Yes, it could continue pumping up, which is fine. So don't fully close out if you don't want to, but take a good bulk of your profits off the table. And if price moves up, great, you've got more profits locked in. If price does reverse from here, stops you out back at your entry, absolutely fine. Winning trade, great. Great. So, there are your options. Come up here, reject. Come up within this zone, reject. Above this zone, swing failure, these highs, then you've got another short trigger. If it does get above this consolidation, then your next thing to look at would be the overall range. So we look at the overall range. There you go. So like we've been saying for a while now, we've got all this volume here to contend with. So we've got a big volume cluster around here, which obviously is right at the breakdown point. And this is coming in roughly around, call it 23k for easy numbers. Above that, we've got a big volume cluster here, and this is coming in around, call it 24k. And if it gets above that, then we'll be looking at the range highs. Now, if price does manage to get all the way to the range highs, then first and foremost, be looking for potentially a rejection here. If you don't get a rejection here, then I'll be looking to take these highs, back down, back in, and you've got a short trigger, and you just trade in the range. You know, this range could go on for a long time. It might not go on for a long time, we don't know, but, you know, while we're in a range, especially a high time frame range like this, you know, you're talking, what's this range? You know, it's a 40% range. It's a great trading range, you know. If you're trading from the highs to the lows, that, you know, that's a 40% swing. That's a swing trade. And you can still take these smaller plays, depending on how you've got your account set up on your exchanges. So yeah, take the highs back in, short trigger back down. If this doesn't happen, and we get no reaction here, and bulls can continue squeezing price up, then once again, like we've been saying for a long time, we'll be looking back into this consolidation here. So first and foremost, can it breach the lows, which is roughly around 28.5k? If it can breach the lows of that, then we'll be looking up at this point of control here. Gets up to this point of control, it's about 30k. Okay? So that's what we're looking at to the upside. And again, if price gets up to that level, then we can start looking, potentially, if we can clear out of this range, back into this consolidation here. Okay? And that's if it gets there. That's if it gets there. Now, what happens if price doesn't get there? Well, if price doesn't get there, let's remove this. Say price does fold over here, or it folds over higher. Gets acceptance back into this mini range. Again, let's throw on another volume profile in this mini range here, so we can see exactly what's going on. In fact, let's just put it all the way along. So, if price does fail back down, then I'll be looking at this value area high. And we can see we've got respect on this level here. If price gets acceptance back into this value area, then I'll be looking down at the overall macro point of control, which is also this range point of control as well. If you get a reaction there, great. If you get no reaction there, overall value area low, and again no reaction there, then you'll be looking to trade that back down to the June lows. And once again, either A, you get a bounce. If you don't get a bounce, swing failure, reclaim, and if no swing failure, then we're going lower. Okay, and if you want to see my lower targets, I have mentioned them in one of my public YouTube videos. If you go back a few weeks ago, you'll see what my lower ideas are if it does get down there. So, am I bullish? Am I bearish? Neither. I'm sat on the fence. You know, we're in a range. It's, from an elite wave perspective, it's very difficult to get a bullish count out of here. You can get a bullish count out of here. And you know, I've got two options that show that the low is in. However, trying to force fit an elite wave count within to this for a bullish structure it is a forced fit. So what would I like to see? Well, ideally, I want to see these lows being run. If we see these lows being run and we get a decent bounce, then yeah, short term and potentially long term, the lows could be in. If we don't see that and price just moves up from here, then I'm still going to be cautious. You know, my trading strategy doesn't change. I will still short the highs and I will still long the lows. And eventually one way will give. It's as simple as that. Have I started loading up long-term spot yet? No. Because I want to see that structure change to the upside. You know, so far we've got a slight daily change to the upside. And we potentially could, if we do clear this, like we just said on the weekly there, if we do clear this and get a decent close above this and start creating a new weekly structure to the upside, then yeah, I might start changing my my bias. But until then, macro is still down, okay? And it's as simple as that. So that's the trading plan. That's what I'm working to right now. So we either get a pullback around this region. If no pullback in this region, then we'll get a pullback in this region. If no pullback, then I'll be looking up here. On the long side, I didn't mean to go back that far, oops. On the long side, we've got this value area high here. We've got this region here, which is the macro point of control and the value area low, and potentially the range lows. Simple. Okay? And that's it. Level to level. Don't overcomplicate it. Right, if you guys want to learn with us and want to join our free Discord, links down in the description below. The free Discord, as we've said many times, we've got access to loads and loads of different styles of trading. So not just how I trade. We've got people that trade with order blocks, you know, supply and demand style trading. We've got people that trade via Confluence like I do, and mainly volume profiles. Yeah, we've got a lot. And obviously, if you want to take your learning to the next level, then come check out our website. Links down in the description below. You know, spitfiretraders.com. On here, access to our free Discord. And as I say, if you want to take your trading to the next level, then come check out our Copilot section, which gives you access to our private Discord, where you'll get real-time updates from me, what I'm looking at, where I'm planning to trade. You will get a weekly live streams. When we get volatility, you'll see me jumping onto stream to talk you through it, to effectively hold your hand. And you'll also get access to a back catalogue of nearly 60 hours worth of educational content. We've now finished the Elliott Wave series. We're going to be looking at trading psychology next, which is probably the most requested modules. Yeah, so if you want to join us for that, come check out our website. If you don't follow us on Twitter, links down in the description. We post a lot of ideas on Twitter as well, and we also do a lot of shit posting. So take anything on there with a pinch of salt. And that's about it. If you've enjoyed today's video, hit that like, consider subscribing, and maybe hit that bell notification so you don't miss a future video. And if you missed our Tuesday's altcoin video, then go check it out. I'll leave a link at the end of the video. All right, gang. That's it for today. As you were. Bye-bye.